Freeland is doing her best job and best effort to try and save the housing bubble, the massive credit bubble that has been blown in Canada. But will it work? Probably not. Let's get right into it and see what's going on here. So Freeland announces guidelines to support homeowners. So Better Dwelling did a good job of summing these up. So the FCAC is the latest regulator endorsing the reckless lending from lenders. FRFI are expected to develop procedures to identify at-risk mortgage borrowers, including proactively monitoring and identification of early stress, a criteria for offering mortgage relief, disclosure of information to the consumer to ensure express consent. Once identified, the lender is to make accommodations to mitigate any risk, including waiving prepayment penalties, waiving internal fees and costs, not charging interest on interest, extending amortization. So this is kind of insane. So apparently this regulator is going to be monitoring things, and then if they see anything that they think, oh no, that shouldn't be like that, they're going to then go to the lenders and say, hey, you've got to waive the fees for this, you can't be charging interest on that. I mean, we all know how this is going to go. This isn't going to work. It's just another band-aid on a bullet hole type solution, which isn't going to work. I mean, you're still going to bleed out in that situation. So kind of crazy. And then also what we're having happen as well is the bank regulator, the OSFI, is stepping in. So let's get right into that and see what's going on there. So, bank regulator steps in to deter banks from extending mortgages to as long as 90 years because, yes, that's really happening in 2023 in Canada right now because people can't afford the debt they have and they can't afford the house that they're in. That is the real crux of the matter. So, let's get right into it and see what the OSFI, if anything, is actually doing. So, let's see what they're planning to do here. So the OSFI's basic goal is to change underwriting rules to reach a point where people won't be spread too thin in terms of mortgage payments, adding that this would establish a closer relationship between an individual's income and what their total available borrowing could be. If these changes take effect in the first fiscal quarter of 2024 as proposed, they won't have an impact on current mortgages. Those contracts are enforced and valid, Butler said. OSFI is not reaching into existing contracts and changing them. So, you know, what they're saying there is essentially all the mortgages right now would be exempt from this. So this is a totally ridiculous thing that they're coming out with, and they're saying, yeah, you know what, we're going to do this, we're going to stop these banks, we're going to stop these banks extending amortizations, but we're only going to do it on mortgages which are issued after 2024. I mean, this is just unbelievable. I mean, all the problems that we have right now are with the older mortgages. They're not going to be with the new ones in 2024. You would have thought that people have learned their lesson, but this is just the regulators taking a step back. They're not doing anything. It's all a front to try and make themselves look better. And you know who's in charge of the regulator. It's ex-bankers. You've got the same thing going on at the CMHC. The rotating, revolving door between government and private institutions is constantly circling round, and the levels of corruption are there and evident, I think, in my eyes. So instead of OSFI said in its release that the regulations would require lenders to hold more capital against future mortgages with a growing balance and loan-to-value ratio above 65%, meaning the outstanding balance is 65% or more of the value of the collateral, the regulator noted that this should encourage banks to lessen the number of mortgages that would otherwise go into negative amortization. Butler said while this additional financial buffer is likely to be small, it will eat directly into the bank's profitability. Banks hate the reduction in profitability. They hate it worse than anything on earth. And then he basically goes on to say that it could mean higher interest rates as a result of that. And it could also mean credit tightening. I mean, the key thing here is that could mean credit tightening because the banks are going to be less willing to lend if it's actually potentially going to impact their earnings. So they're going to be more picky about who they're picking because they don't want that to be the case. So it's kind of interesting to see what's going on here. But the regulators, they're not doing anything. They know what's coming and they don't want to do anything about it because they don't want to take any responsibility for the fact that this bubble has been pushed to the absolute extreme. And nobody wants to take any responsibility. I mean, you've got Pierre and the Conservatives. They were in charge when this thing all set off and started. You've got Trudeau and Jagmeet. They haven't done a single thing about it. You've got the OSFI. You've got the CMHC. You've got all these different outfits not doing anything about it. Not doing anything about it. They don't want to intervene because they know they don't want to be the one who is blamed for the demise of this. They want that to be blamed on immigrants and poor people because that's who's blamed, and that's how history has taught us that things are always blamed on the immigrants and the poor people. Even going back as far as ancient Rome, believe it or not. So it is not a new thing. And then just to show you the type of thing that's going on, I mean, this guy has an amortization remaining 72 years and 7 months. So essentially that person is renting off the bank. And, you know, their interest rate was, I guess, this 1.45% in January 2022. And right now it's 5.45%. So, and that's December 2022. So that's gone up even more than that and is probably around 6-7% now. So people are just getting absolutely slammed by this. And if you look at the bubble, just to show you how far out of control this really is, this chart really shows it. And we don't have a good selection of charts here in Canada. It kind of annoys me that, you know, we have this housing market that is worth so much money, that has such a high market cap, and we don't even have decent charts on it. I mean, isn't that just crazy when you really think about it? I mean, we are well behind every country in the world in that respect. So housing affordability in Canada, and then these are basically house prices to disposable income. And you can just see how essentially in the past, between the 1970s and pretty much the start of the millennium, you can see that what happened. You had housing prices often got away from incomes, and then they corrected, the bubble burst, and then they would come back down to the trend, and then they go up again, they come back down to the trend, and now we've gone up again. And although this is a really, really big one, the two recessions here, 2008 and 2020, those recessions weren't really real recessions. So had that actually been a massive impact in Canada's economy that was going on, guess what? You would have saw this bubble burst in 2008. But the fact is, when you look at private debt, when you look at household debt compared to the US back in 2008, Canada was actually at a way lower level. So the bubble just wasn't as big, so it was able to continue inflating that bubble. And when they dropped rates in 2008 and in 2007, what happened? The housing market ripped even higher. And then did they increase rates on the back of that? Absolutely not. And who was in charge then? The Conservatives. So, you know, I'm just saying that because, you know, everybody is coming out in the political sphere and saying, I'm going to solve this. And the fact is, none of them are going to solve this. And they haven't solved it in the past. So why are we going to believe them now? Especially when you've got people from that past government telling us that, yeah, I'm going to solve it now. I'm going to really do something about it. I mean, what the hell? You just can't believe people, but this is politics. And, you know, these people are crazy. So I wanted to show you this and do another comparison like we've done before. So this is in Windsor, Ontario. You've got this starter home essentially that's $400,000, which is just insane. Average household income in Windsor there is $70,000 Canadian, and I've adjusted all these to Canadian. So $70,000 Canadian. The average income in the US is 60,000 Canadian. And you can see that you can buy this nice starter home for $128,000. So it's a nice starter home, you know, pretty much brand new, nice and fresh. I even like that it's brick there. That's really nice too, compared to this vinyl shack, which looks like a shed. And this is $400,000. So this is kind of crazy when you think about it. So $400,000 for this, and then you've got $128,000 for this over the border. So what gives? Because, you know, the income, the difference in income is less than 10%. So what's going on here? And this really, again, is just showing you real life examples of the bubble when you just move like 10 miles essentially away from each other across a border. Guess what happens? The prices there are at reality. They are more normalized and actually in correlation with incomes like home prices should be. But in Canada, it's not that way at all. So it's kind of crazy. And when you also look at this as well from an investment perspective, if you're actually an investor in this market, you buy this thing for $128,000, and the rent range, it usually tells us here on Zillow, but you've got estimated monthly costs around $838, and it will rent out for $1,300 a month. So, you know, you'd be positive cash flow with that. You'd be actually in a really good position. That would be a decent investment. I mean, it's not the best investment in the world. You can find better things than this, but it just goes to show you. And in Canada, in most major cities, you are way cash flow negative when it comes to the rent. So you're collecting less in rent than the actual costs of the home. So why does that happen? It's when people are there and they're speculating on the future price growth of the home. They're not actually investing in it for cash flow. They're investing in it because they think and they're speculating that prices are going to go higher. And it's exactly the same as the NASDAQ bubble. It's exactly the same as the tech bubble in the sense that when you go out and you buy tech stocks, you're really just speculating on future price growth because they're not paying you to own them. There's not any sort of dividend being paid. Now, I'm not saying don't go do that by any stretch of the imagination. But this is what these stocks are in essence. They're just speculative stocks and they don't pay you anything to own them. They're not really an investment. It's just speculation on the future price of that stock. And it's the same when it comes to housing. People are just speculating on the future price growth of the house versus actually an investment. So they call themselves investors in Canada, but really they're actually speculators. And that's what a lot of people don't understand. And obviously the real estate industry is never ever going to call them speculators, because at the end of the day, they're trying to sell them the properties. They don't care. They want the investors to come in. So you can see the dynamic and how it gets all messed up. And then people think, oh, yeah. And then there's all these stories that come out and swirl around about why prices are going up. You know, it could be population growth, the moon cycles, the flow of the rivers, whatever it is. It could be many different things, and some of them could actually be contributing to it, so it makes logical sense. But the thing is, you have to come back to this, and I always think you have to come back to this because this really puts it into perspective, is when you've got house prices that have completely ran away from incomes. No, you can't talk yourself out of that. You can't say, oh, Luke, it's immigration. Well, it's not, because look at this chart. If the immigrants can't afford the houses, then one's got to ask the question, how are they buying them? And a lot of it is fraud. We know that. So that is happening, and that's definitely a dynamic there. But I'm just trying to tell you that this is a bubble, and it's a bubble because of how far home prices have got away from incomes. And it's happened in Canada in the past, as you can see on this chart. You can clearly see that in the 70s and in the 80s, prices have ran away and they've corrected back down to incomes. The scary thing is right now, we are so far away, and to try and save this bubble in any shape or form will absolutely destroy the currency. And I think you do have to kind of think of that. You have to protect yourself, have your insurance on any savings, any cash, have your insurance on your net worth, whatever that is. And I think you do have to prepare for that. That's definitely something that can happen. But I doubt that's going to happen, because look what the central bank is doing faced with inflation right now. You can kind of see where this is going in the future. So I think it's another disaster and a train wreck where we are right now. And if you've enjoyed this video, you may like this video here. You might also like this playlist here. I want to thank you so much